Ladies and gentlemen, it is July 12th, 2023. It is 9:20 a.m. and inflation is coming down in this nation. We are getting an early bell on an early because, damn it, this inflation report deserves it. Now, the market's up. I don't know if the market sustains this. Don't know if the market tanks. But I do know in these 10 minutes we have before 9:30, before anything can happen, because the market can be the market, we get to celebrate a phenomenal inflation report. I mean, when I mean phenomenal, this inflation report was absolutely incredible. And it was incredible for a variety of reasons. We're going to get into it. Top numbers. Core CPI decreased 0.2% month over month, went from 0.4 to 0.2, which is what really mattered. Headline CPI inflation went from 4% to 3%. That would not matter. It would mean nothing if core didn't go down 0.2 because core has been pretty flat and sticky over the past couple of months. So that's what the Fed wanted to see. That's what the market wanted to see. That's what we got. And as a result of that, Palantir, $16.84 in the pre-market. Robinhood, $12.27 in the pre-market. TFC, $33.11. SoFi, $9.46. We are getting a market that is excited. Open Door at $4.79. You've got AMC up at $4.43. S&P 500 is at $446. That is a new 2023 high on the S&P. Tesla, $276. So obviously the market's very excited. We got a lot to get into. Thank you to the 162 people that are here. Roy, Dominic, Jose Antonio, Drip Nation, Astricus, Can Man, Elise, Warren, Felicia. Inflation runs on Duncan. That's very true. Duncan's been keeping inflation in check. Mark LeBlanc, Charles, admit is my go-to YouTuber. It means the world to me, man. Thank you for being here. Broccoli Brob, Jeremy, Miyoko, Garcia, Bay Ray. All right, boys and girls. Matt, Invisible Voices, guys, let's get into it. We got a lot to talk about. All right, so let's start off with the let's get into some of the core numbers on CPI, and then we'll get into the market. If you own stocks today, you know your stocks are doing well. The shorts are getting burned this morning, and we'll see how this lasts going into it. So stripping out volatile food and energy prices, core CPI rose 4.8% from a year ago and 0.2% on a monthly basis. Consensus estimates expected respective increases of 5% and 0.3%. So we on both of those numbers for core, which is why the market was excited and ultimately why this was a good thing. Remember, some stocks are up 10, 15, 20% since Monday and Tuesday. So the fact that they're up again on Wednesday means that this is just added compounded momentum on what has been happening over the past couple of days. In sum, the numbers could give the Federal Reserve some breathing room as it looks to bring inflation down. That was running around 9% in June 2022, the highest since November 1981. Now, do we still get a hike? I think the odds are 50-50, whereas yesterday I would say the odds are 70-30, we get a hike. Now I think the odds are 50-50. If I had to bet my life on it, I still say we get one hike, and that should be enough to tighten enough of that economy for things to start getting back into place, and we pause for the rest of the year, if not cut. Most likely pause, and then we get a cut in Q1 of 2024 or Q2, which would be very good. Housing costs, which account for a large share of the inflation picture, are not coming down meaningfully. Because rates have been pushed so low, the Fed during the pandemic can rise them so quickly. The Federal Reserve's rate increases not only reduced housing demand as intended, but also severely limited supply by locking in homeowners into homes they would have otherwise listed for sale. What we talked about on Finance Junkies last night, we pulled up a chart that home creation or home units that are being up, single family, multifamily, et cetera, townhomes, are at their highest level since 1975. So when the Fed started raising rates dramatically, obviously it was not the best for homeowners. Now we're getting to a point where home creation is happening at such a unique level that might actually lower the prices of homes, which is going to be good for inflation as well. Let's get into the actual report right here. This is a report you can actually access on the website itself. And the stuff that is going on. Chris says, me and the wife were playing the Jeffersons themes this morning. Tom Lee was right. Well, yeah, so Tom Lee still has a hefty price target on the S&P. We'll see if it gets there, but he was absolutely right about inflation. And to be honest, a lot of people were right about inflation. A lot of people saw this coming down pretty dramatically. Now, some interesting things that I saw in the report when we dive a little bit deeper into it. Airfare, for example, has gone down pretty dramatically, which is really right. More people flying, more people getting through airplanes, more traveling, more industry, more tourism, all that stuff. Eggs have come down a month over month, which is really good because eggs were like crazy back in February. Oil hit $80 this morning, which is, it was trading at like 67 about 2 weeks ago. So it's up a little bit on the news because if inflation is getting better, oil has the chance to be a little bit more adjusted in terms of going up. But a lot of these things have come down. Food has come down. Meats have come down. Pork has come down. We've got a lot of good numbers on a lot of random things that are starting to come down, which is good at the end of the day. And that's ultimately important. So if you go through the actual report on the website, and I'll put the link a little bit later, you'll be able to see another big thing as we get into vehicles. Used cars have come down a little bit, which is also incredibly important. This was one of Cathie Wood's big thesis on the economy, which is that if used cars start coming down, we're going to see a lot better chance for more people to enter into the car market, which is going to be, it's going to be tremendous momentum in terms of decreasing inflation. In 2022 January, used cars, the average price for a used car was like $40,000. It was ridiculous. And it's supposed to be around $27,000. So Cathie's thesis, she obviously didn't get the timing perfect. It took about a year and a half to get the timing right, but her overall argument about things coming back down has happened. And as a result of that, it's been pretty good in terms of her thesis on inflation coming down, which is really important. The eggs are manipulated, probably. The eggs are definitely manipulated. Tom Lee said a 7% move after CPI. That's true. And the S&P right now is up 0.80. It's up 0.86% pre-market, and it's really hard to move a major index like that in the pre-market, even, 0.5% because they're so huge. Let me pull up Webull right now, and we'll get into some of the markets. Again, S&P at 446. The NASDAQ also is up pretty nice. The Dow Jones was up. The Dow Jones was up is just insane. The Dow Jones usually doesn't move up as dramatically on some of these pieces of news. So let's pull it up right here. Make no mistake about it. This was the biggest news of the past 6 months. This was our Super Bowl. This was the most important thing. And I just want to say before we get into the charts, if you even care about CPI, none of your friends do. None of your family does. I'm yelling out here I'm yelling in this room to 426 people about CPI. My dad and my mom literally could not care less. My sister's still sleeping. Like no one cares. If you care about this, you have already won because you care about the economy. You care about your financial freedom. You care about stocks. You care about investing. You care about progressing in life. So regardless of what happens, I think this is a win just in terms of life. And then obviously getting into the numbers, it was a pretty good report. But it really matters to actually be financially literate around these things because they make an impact. Now, some people would say ignorance is bliss, which I also understand that side of the argument, but still, this really matters. SoFi, $9.38 in the pre-market. NASDAQ, we've got 13,760. Not bad. We'll see what happens with the open. Palantir at $16.83. PayPal, look at that. PayPal, $71.77. So for those who bought PayPal at $58, you are probably up nicely on that. Carvana, we got some of the retail stocks leading up as well. This one is at $7 pre-market, up about 5%. Ginkgo Bioworks is up 5%. Cathie Wood bought 1.3 million shares of this yesterday. Google is up at 119. Enphase is up at 178. The stock was at 159 last week. Tesla at 276. Tesla fell down a little bit from 279 or 282 a couple days ago. So now recovering just a little bit at 276, up 2.4%. Open Door is up at $4.74. Bitcoin around yesterday, 30,652. ARKG is up 4%. Netflix is up 1%. And on top of that, we've got earnings in about a week. We got JP Morgan and Citi on Friday, Pepsi on Thursday, and then the big earnings start next week with Tesla and Netflix. So we're going into earnings season, and we're going to see kind of where the world goes from there. NVIDIA, $430. I think the top on NVIDIA, what was the 52-week high on NVIDIA? 52-week high on NVIDIA was $439. So getting a bit closer to that level that it was at. We've got a minute until the market opens. Here we go. Thank you, 475 people, for being here. Here we go. We have, how much time do we have? We have 15 seconds. And we're going to see where this market takes us. Does it get sold off? Does it get bought? Does the market go even higher? This is what we're going to find out in 4, 3, 2, 1. The stock market in the United States of America is now open. my goodness. Oh my good. Wow. The stock market. Wow. Palantir opens at $16.70, up 1.4%. Robinhood. Okay, this was up at $12.27. It fell down $11.90. We'll see if it can recover from there. Nasdaq, 13,920. It opens up 160 points in the open. Remember, the Nasdaq, this is a 2023 high for the Nasdaq. It hasn't hit 14,000 since 2021. Palantir, $16.80. Teladoc at 25. Hims at $8.77. PayPal, $71. We've got SoFi, $9.31. So it was a $9.46 in the pre-market. So a little bit of it getting sold off in the market open, but still maintaining a decent 2 to 3% premium from yesterday's prices from the pre-market as well. Enphase at 178. Meta, $300. Meta is now above $300. The market cap of this company is $775 billion. Congratulations to all Meta shareholders. You are up on this investment at $300. The stock was at $88. People counted out Zucks, and Zucks has delivered. Zucks has delivered massive shareholder value. And Meta is doing really well. Open Door at $4.50. Bitcoin at 30,000 flat. Airbnb at 139. Let's go to Baba. I see that in the chat. Alibaba, $94. So some of the Baba shareholders that loaded up in the 60 to 70 range, you are up, even though it hasn't been a spike. It's taken some time to get there, but Alibaba at 94. China is easing up a little bit. They realize they got to let some free market cap happen. So I don't know if this is the best time to invest in China, but the government is starting to realize what they need to do to let these tech companies flourish, and they are starting to let it happen. Tesla at 274, down just a little bit from the pre-market, but still up 1.85% for the day. Let's go to Amazon. Did Amazon benefit from this? 130. Amazon's about flat. Let's go to Microsoft, getting that Activision deal coming in, 337. So again, big tech outside of Meta up slightly, not up dramatically. Big tech is not up as much as we would imagine big tech could be up. But some of the small caps are continuing to get momentum, and they are continuing to rally. Enovix at $20. This is a stock we've been talking about for a while. Oracle at 115. SoFi, 924. What else do we have? SLG. This stock continues to just do so well. A dividend annually of 13%, fair value of 65. $12 billion or $12 billion in assets, $2 billion market cap, one of the top two buyers of New York City real estate for Class A buildings, just doing phenomenally well. We were talking about this one when it was $19, now at $33. You get capital appreciation plus a nice dividend, and the only reason for that, usually that doesn't happen. You don't get a massive capital appreciation to the point where something's valued under like 70% and a dividend that's as high as 13%, unless there is a dramatic mispricing in the market, and COVID is what caused that mispricing for SLG, because obviously real estate prices crashed. Apple's still not at $3 trillion yet, at $189. So Apple's still under $3 trillion. TFC at $33. We broke 33 for the first time in a couple of weeks. Yeah, not bad. Square at $72 as well. All right, Palantir at $16.71. It was a good report. It was a really, really, really good report. Not bad at all. Let's look at some of the comments. Let's see what we are saying. What do we have? We just got a bunch of rockets. CPI going to be 2.6% next month. Well, no. So this is the interesting part about this whole situation. Now it's like losing weight, right? I've used this analogy a bunch of times. You get from 170 to 150. Now to get to 150 to 130 is a lot harder, because you got to do a lot more work. So to get us down even further, I know Trueflation has us at about 2.5, but CPI is at 3. So CPI is not that far off from Trueflation. So the question is, how easily will we be able to continue to get down? And that's what we're going to be seeing over the next couple of months in terms of how it comes down. Amit, show them your TFC spreads. I don't want to show the TFC spreads, but let's just say, Chris. Thank you to Daddy Chris. Chris, when I see you, I'll make sure I get on my knees and just make sure you are ready to take what I'm ready to give you, because look, man, it helps to have some friends who actually know what the fuck they're doing. I'm very grateful to Chris, very grateful to Carlos and Vitaly. Look, I'm looking at my portfolio right now. I'm not going to share it, but it's up a lot. I mean, this week, it's up $12,000 this week. It's like, this is crazy, bro. This is insane. I remember in 2020, I was watching there was a point, guys, where I was down 50% all time. Like I was down Like I was down more than $40,000. And you're looking at that like, damn, I worked my ass off for those $40,000. I fucking, my blood, sweat, and tears. I used to drive 120 miles a day up to Northern Jersey for 2 years because I had my biggest consulting client and they were paying my bills while I was trying to build my startup. By the way, audia.io in the back. You can check it out. We're trying to build the YouTube of audio. And during that time, I was subsidizing my lifestyle by working a job that I would come home at 11. I didn't see my mom for 5 days a week, bro. I would see her on Saturdays because I would leave in the morning and come back at 11 p.m. at night. And after all that work, I look at the portfolio, the hard invested money I took, I put it into the market, and it's down $40,000, $50,000. And so to see, the recovery over time, just because you trusted in the market, you had your principles, you had things that you invested in good companies, and you found opportunities, especially because, you had some friends that were able to fill you in on this stuff. And hopefully that's what my channel can be. It can be a better source of information and entertainment to get you to think about investing opportunities. I'm not the perfect investor. I don't know everything that I'm talking about, but I try to learn as much as I can. And, thank you to Chris for helping me learn a lot of this stuff. It's because of him that I get to look at some green after seeing years and years of red. Hard-earned money flushed down the toilet, starting to come back just a little bit. So not too bad. I'm now up all time. I'm not down $40,000 anymore. So it's pretty cool, man. And I know a lot of you are seeing your portfolios as well, and you invested in some of these stocks and they're up, and it means a lot. It means a lot to see that stuff because you don't get it often. So it's pretty amazing. All right, let's get into some of this mainstream coverage and see a little bit more. Mohammed El Iran, he's an analyst that I think a lot of us trust. His thoughts on what's going on in inflation, and then we'll get into some more charts and see what else is going on with stocks.
Inflation data for the month of June, the CPI print is forecast to show a rise of 3.1% on a year-on-year basis. For insights,
I don't think this number is going to change anything for July. The market is now pricing 90% probability that they'll hike, and I think that's absolutely right. What's interesting is September. There, the market is just above 20%. I think the actual probability is higher than that, and what today's number will influence is the September implied probability of a rate hike.
So how do you think the number is going to come in? I mean, do you think that it will be much softer? We've had forecasts from Tom Lee, which we've been talking about earlier this week, that the S&P would go up 100 points within the next week, implying that the print will be much softer than the already soft print the market is expecting.
Right. So we've entered a nice period for the CPI headline inflation prints. I think we'll get around 3% today. I think it's going to be well behaved on an annual basis because of the base effects. But me and many others are going to be looking not just at core, not just at services, but asking the question, can you maintain goods disinflation? That's what has gotten us down here, particularly energy, while also starting to see services disinflation. That is the big question.
Okay, I'm going to move on from that and get into some PRs that came out today as well. But his point essentially is, would we be able to see goods come down while we're also seeing services come down, which is one of the core pillars of disinflation? And we have to a decent extent. Not everything, like things like airfares have gone down. Also, pet food has gone down. That's another thing I was seeing when I was reading the report. Not everything is going down, but some things are going down pretty nicely. And it points to Mohammed's argument about services and certain different sectors going down that leads us to disinflation. We got a PR by Palantir. We actually got 2 PRs today. Not going to read the entire PR, but Palantir has announced an expanded partnership with Carahsoft Technology, the trusted government IT solutions provider. Under the agreement, Carahsoft will serve as the public sector distributor for Palantir, making the company's Apollo platform available to the public sector through Carahseller's reseller partners, and be able to give it to additional state and local contracts for different municipalities and governments. Now, this is a pretty big deal. It's not the biggest deal in the world, but it's important. Back in June 2022, Palantir partnered with Carahsoft, which is essentially like a middleman for getting you government deals. Carahsoft is one of those agencies that takes your software and figures out a way to package and sell it into governmental agencies, whatever the agency might be, a small agency, a big agency, it doesn't really matter. And their goal is to take a little commission, but the relationships they have, the network they have, the connections they have, it's kind of just easier to sell your stuff into the government if you go through something like a Carahsoft. Now, Palantir is expanding their partnership to deliver the Apollo platform, which is really, really interesting. Apollo has not had its day in lights in the context of the media, in the context of YouTubers covering it. All of us try to understand it. We don't really fully get the whole grip, the grasp of it. But going into the public sector is very important, because what Apollo does from a pure overview perspective is that it provides simultaneous deployment for the back end architecture of what teams are doing within an enterprise. So if you're getting software updates from marketing to accounting to sales to whatever, it can all be deployed in one place, and that helps you become more efficient and actually get updates into your product. The government definitely needs something like that. There are tons of use cases for where the government could use it. And so Apollo selling into the government sector is incredibly important. And that is a big deal in the world of Palantir. This Thursday, AIP demo, 2 p.m. I signed up live. They're doing it every week for 6 weeks. Palantir telling the market, F you, we don't talk about it. We are about it. It's not in concept, but in actuality. This is another big piece of news that Adam's bringing up. On Thursday, there is the first of their AIP demos. So every week for the next 6 weeks, you can register on their LinkedIn or even on their Twitter. Palantir is going to show AIP in the real world and what it looks like. It's going to be some like live webinar for the next 6 weeks. So for all the customers, for all the retail investors thinking, what does Palantir look like? What is the webinar? What is AIP? How do we actually understand it as someone who can't use it? They're going to be giving you live access to all of that stuff, which is going to be really important. Palantir now at $16.62. So it's sold off a little bit. We thought we might be able to test 17. Didn't really get there. $16.64. Microsoft is up at 1%. Amazon is up at 1%. Robinhood also, it broke through. I mean, it was at $12.34 in the pre-markets. I was at Dunkin' Donuts just looking at it like, oh my goodness, it just ravaged through. Obviously got sold off, still at $11.95, which is not bad. Ended at $11.80 yesterday in after hours. Fubo, this is one a lot of people are talking about. Look at that, up 8%. Fubo TV, $2.81, 7.66%. Another small cap is Open Door. At Open Door, remember, this stock was 93 cents in December 2022. And they were losing money hand over fist. I think they're still losing a lot of money. And, the housing sector, they bought a lot of homes that just decreased in value. I guess there was an arbitrage there. And this is something I didn't catch. But at least from 93 cents to $4.57, almost $5, there was a 5x return. If you looked a little bit deeper, or at least a 4.5x return in terms of what was going on with the company. And the thing is, if ChatGPT hadn't happened, if we hadn't had the AI moment, if we don't have massive deflation, or at least, disinflation, we would not see the rise of the small caps. What we're seeing right now is big techs basically sit on their laurels in terms of the valuation. Amazon, Nvidia, Tesla, Microsoft, Google, they've gotten such hefty premiums. Well, one could even argue not premiums, but just reverting back to their original valuations. Obviously, Nvidia blowing past some of those things, but Tesla's hit 270 before, Meta's hit 300 before, Amazon has hit 130. But the reason they're getting there is because the market wanted free cash flow. The market wanted profits. The market wanted reducing capital expenditures. The market wanted businesses that are proven. And these companies laid off a crap ton of people and showed to the market they are fiscally responsible, and profits and revenues increased. The problem is to grow from these valuations, from Amazon to grow above 1.34 trillion, Microsoft 2.5 trillion, Google 1.5 trillion, Meta 700 billion. It's still hard. It's not the easiest anymore, which is why the valuations, I think, are starting to relax a little bit and not going up as much as we think they would. Which is why all of this stuff is going back into the small caps. It kind of makes a lot of sense, right? If the market's like, all right, Microsoft's up 40% on the year, Meta's up 140%, and Nvidia's up 196%. I'm not, if you buy Nvidia, you are paying $1.07 trillion of market value per share. That means when you buy this company, you are expecting it to be worth more than 1.07 trillion, effectively paying $1 trillion per share. You need the company to be worth more than that to generate a return. Otherwise, you will lose money. And so I think a lot of investors are looking at it, especially retail investors, like, man, $1 trillion is a lot of money to spend for a share of this company because it's run up from 400 billion in the past couple of months. And so, what's undervalued? Let's go to Robinhood. Robinhood's market cap is $10 billion, and the cash they have on hand is around $6-7 billion. That's not bad. Let's go to SoFi. SoFi is growing dramatically, $9.17. It's at a market cap of about $8-9 billion. This one seems a little bit more attractive. And so I think the entire market is starting to recognize a little bit more of a correlation between that, which can be a little dangerous, because then you get companies like Carvana that, were almost going bankrupt, that are now at $36, up 2.11%, right? This is up 500% in the past 6 months, which is a bit crazy. CleanSpark, a Bitcoin energy play, is up right now at $6.44. Snowflake at $172. SLG $33. Rivian Rivian's down today, 3%. I'm not sure why it's necessarily down, but it had a great couple of weeks. Nikola is up as well. This stock is literally a fraud, and this stock is doing well. So It's some of this stuff is a little concerning. Shopify, really interesting thing they announced. They announced a new AI a product called Sidekick, and it integrates on your Shopify store. It's actually amazing if you watch the demo. Basically, if you have any questions around entrepreneurship, your specific store, why sales are down, why traffic is down, how to increase your net margins, you can ask it. It's essentially like a ChatGPT bot that is trained on your store's proprietary data and, like, in general, how to be a good Shopify e-commerce seller, and it'll give you direct answers right away. That right there is going to encourage more entrepreneurship, more efficiency in entrepreneurship, more ability for entrepreneurs to sell their stuff. It just creates this deflationary effect on the economy when you have this type of AI intersecting with commerce like this. And it's a really great product from Shopify. So awesome stuff from Shopify. TFC is on fire. Where's TFC right now? Wow, $33.45. Regional banks. Chris Patel has been talking about regional banks for a very, very long time. And the reason he's been talking about it, if I can reiterate his thesis to an extent, is that after Silicon Valley Bank collapsed and FRC, essentially the market threw the baby out with the bathwater. And they said, look, all the banks are screwed. The Fed's going to have to come in. This is a 2008-like moment. And TFC is a company that was sitting at $56 for like the past 6 years, hovered from $45 to $67, so around about 55. It went down to 26, levels that it has not seen since 2016 or since COVID. And so when you see a stock that's not down to where it was in the past 6-7 years, with a company that 55% of their depositors are small businesses, so the risk of a cataclysmic bank withdrawal happening is just so fundamentally low. There's a market opportunity there. And so regional banks have done phenomenally well. Let's look at some of the other ones. PacWest. PacWest, look at that, up at $15. This one was down a lot over the past year. And there was another one, Western Alliance, look at that, up 4.69%. If you're in the regionals, you're doing well. If you're in the regionals, you're doing very, very well. Robinhood getting sold off now at $11.77. Still pretty nice for Robinhood, but it's getting sold off. SoFi at $9.11, getting sold off a little bit. And let's go to Palantir. Palantir also at $16.67. So Palantir maintaining a little bit of momentum. Some of the other ones getting sold off. Still a very, very green market. Obviously, the market liked the CPI news. If you're just tuning in, core CPI decreased 0.2% month over month, and CPI went from 4% to 3%. Not 3.1, not 3.2, not 3.4, 3%. And now it is a race to get down to 2%, get the Fed to pause, get the Fed to cut. And if that happens, 2024 is going to be a fun year. Going to be a very, very fun year. Didn't Vitaly sell TFC yesterday? Yeah. Well, he bought Enphase, so Vitaly's doing good as well. He didn't sell his options, but he sold it to get some Enphase, so he's doing pretty good on that. Let's see what the Twitter sphere is saying. Let's see what the Twitter sphere is saying about what's going on. Obviously, Twitter was very excited this morning as stocks came down. So let's see what they have got to say. Lucid missed their delivery expectations for the 78th time in a row. They're definitely going to be worth $100 billion one day. Okay, Lucid. Shout out to Nate. Is Lucid down this morning? Oh my goodness. Lucid is. Who's in Lucid? Be honest in the chat. Be honest. Who's in Lucid? No one's going to shame you. Be honest. Who's in Lucid? It's down 9%. They missed deliveries again. Okay. Adam talking about Sofi. Oh, Anthony Noto did a. Let me go to Chris's Twitter. Anthony Noto did an interview with Barron's, and he said, quote, SoFi Technologies Chief Executive Officer Anthony Noto told Barron's that it's just a matter of time before his company becomes one of the country's top 10 financial firms. All top 10 financial firms have market caps close to the $100 billion range. SoFi's at $9 billion. Anthony Noto locks performance stock unit options of close to $500 million when the stock is at $26 by 2026. The stock has to basically 2.5x from here by 2026 for at least 90 days for him to receive $500 million in options. So, I mean, his incentive to get this company back to the moon is pretty sky high. And now we just have to see if that can happen. I remember 2 years ago, I had an argument with someone over which would be a better investment, Tesla or Lucid. Yeah, look, I never understood Lucid. And again, I've never been super invested in the EV space, but from what I understood, Lucid was backed by the Saudis, which was kind of like the reason people like them. But being backed by the Saudis doesn't mean you have a great business model. I mean, being backed by the Saudis just means like you're backed by the Saudis and you're like, yeah, you've got some money, but you've got to make the cars and deliver them. And even though it's a beautiful car, it's got to be delivered. And if it doesn't get delivered, it's not, it's not going to work. So never saw the correlation right there. All right, let's go to another Palantir PR that just came out this morning. So we got 2 Palantir PRs, which is pretty nice. Lucid was a Meet Kevin stock. I think he got out of it at like $33 though. He got out of it pretty early. He was talking about that in 2021, but he got out of it. So I think he timed it pretty well. Palantir and Toronto-based startup Air Matrix announced a partnership. Palantir announced a partnership with Air Matrix, a trailblazer in aerospace infrastructure technology. They announced a strategic partnership to accelerate and scale its drone operations by leveraging Palantir Foundry through the Foundry for Builders program. So this is a startup. The partnership will provide Air Matrix clients with aerospace security, including threat detection, compliance, and enablement, and risk mitigation through cutting-edge situational awareness available in the market globally. Now, look, this is not a big PR to move the stock. This is not a big PR that's going to be a big deal. What this is a good PR for, and what we should want to see, is new innovative startups that could potentially have a market opportunity in defense technology, which obviously drone technology, aerospace security, that is in line with mission critical battle situations, especially if we're talking about from an autonomous perspective, and how Palantir software can enhance that. Because what that does mean is that more startups are getting funded by the VCs. They're attacking the defense technology space. And that means there's more billions of dollars flowing into that space. And if that space is allowing money to flow in, and Palantir is providing the software that is the critical backbone for those hardware technologies to be able to do stuff on the battlefield, Palantir should be able to get a decent percentage of that, which is a good thing. And so that is what we have to think about. Look at Palantir, $16.80, recovering just a little bit. Palantir at $16.80, recovering a little bit. Do we see a little bit more market momentum to back to where we were at? Look at that. Look at that V shape. Not bad. Went all the way down, coming right back up. Let's see. Is that Robinhood showing a little? Look at that. Look at those green candles. Robinhood showing a little bit of sign of life. 1185. Meta at 302, Nvidia 434, Nvidia $5 away from its all-time high. So that's how you know the market's having a great day with Nvidia. Because again, Nvidia, one could argue, is one of the most overvalued stocks in the market. I think it is maybe overvalued, even though I think it definitely deserves its premium. When Nvidia has a big up day, that means the market can't justify having a down day, right? Nvidia, it carries a lot of the market. So it's something to look at there. NASDAQ 13,919 continuing to do well. Again, CPI report was good. There's not much more to say about how good it was, but it was good. And the next month's reports are going to be harder to top. Enphase coming right back up to $181. But CPI came in good. This is one of the best reports we've gotten all year, and the market is recognizing that, look, it's good, and Jerome Powell can't really do anything about how good it is. SoFi recovering a little bit now at $9.15 as well. Not bad. It's a good market. It's a good market. Snowflake is down. Well, Snowflake's down. Snowflake's at 171. Wow, yeah, Snowflake's down. Look, the company is worth $60 billion. So, I mean, it'll probably be back up to 192 as the market rallies. Snowflake will be back, but for today, I guess it's down just a little bit. If Palantir hits 100, I will fully exit. Yeah, I don't think Palantir is going to hit 100 anytime soon, but could Palantir, I think, could Palantir hit 20 before earnings? That's the question. And I don't think that's happening. Not before earnings, but if earnings, customer counts goes well and a little bit of a beat on revenue, could it blast to 20? Possibly. I think the gap profitability as well, if we can increase EPS by another cent, that would be amazing. Again, it all depends on these numbers. It really depends. Now, some of these PRs are coming out, which means earnings PR should be out soon, probably by August 4th, August 8th. We should get the PR, latest August 12th. So we will get the PR soon for the earnings date. SoFi's earnings date is July 31st, so we already saw that. But we will see. We will see where it goes from there. All right, let's go back into some of the suits, even though I am now wearing a suit. Ever since I wore the suit, the market keeps going up. So I don't think I can stop wearing the suit, to be honest. It's going to be hard. It's going to be hard to stop wearing the suit. Let's see what some of the other folks are saying. Let's hear this. Here's a guy who has an interesting name, Tony Saccahoni. Tony Saccahoni. This guy sounds like he should be part of the mafia in the 1950s. Italian mobster. He is revealing his top tech picks. Let's see what he has to say.
Time now for some Squawk Picks. Joining us now to talk about which tech companies you should look into, Tony Sacconaghi,
Oh, I was so close. Tony Sacconaghi. I said Tony Saccahoni.
Senior research analyst. Tony, great to see you. We're heading into earnings season. The stocks have run up a lot in the first half. Who do you think has the best setup?
Well, good morning, Melissa, and thanks for having me on the show. Look, I think the thing about technology that's been so striking this year is you've really had very concentrated performance from 6 stocks that have driven the entire tech outperformance. So
Those are the magnificent 7. Those main tech stocks is what he's talking about.
you look at the first half, tech stocks on a cap-weighted basis were up 38%. Non-tech stocks were up 6%. All of that outperformance was driven by the big 6. So those are, the Microsoft, Amazon, Google, NVIDIA, Meta, and
Tesla.
Apple. And
Look, the disrespect for him to not mention Tesla immediately is just like, yeah, we're not talking about Tesla. That was disrespectful, Tony. Italian mob's going after Tesla now.
I think the real question is, how do you go from here, given you've had this tremendous outperformance among these 6 stocks that have driven the market? And I think it's a very tough question, because when we look at
CNBC didn't include Tesla. Wow. They didn't include Tesla. The disrespect. Tesla is up 100. Hold on. Tesla stock. Let me just check this real quick. Tesla is up year to date 152%. That's more than all 5 of these names outside of NVIDIA, and CNBC didn't include them. Wow. Very interesting.
Historical markets where you've had very, very concentrated returns, markets generally do okay in the following 6 months and 12 months. But the stocks that drove that outperformance typically underperform by a bit. So I think the operative word is really to try and be selective. So you really have to have conviction on the names. Now, within that coverage universe, I follow Apple. We have a market weight on Apple. Historically, Apple does very well this time of year. It outperforms in the June to September timeframe, the March to September timeframe. And then it takes a breather when a new iPhone cycle comes into play. And so, my observation on Apple is you can probably ride this stock for another month. I think earnings will be fine. There aren't really high stakes. But typically after about September 1st, you may want to move more towards a market weight. Some investors even believe maybe a little bit of an underweight in Apple because it's a seasonally weaker period. And Apple is at its most expensive period in the last 10 years.
We're seeing a broadening out overall of the markets, Tony. I mean, we just had industrials hitting a record high in yesterday's session. So I'm wondering, within your coverage universe, are you also guiding clients to rotate into some of the names that haven't seen as stellar performance, particularly when we're even seeing the NASDAQ 100 rebalance, which will effectively reduce the impact of the big 6 that you're talking about?
Yeah, I really do think the rebalancing could be a material impact as well. So yeah, we're recommending to clients that they look to the barbells of technology. So what's happened is you've had these big 6 stocks, which aren't hyper growth per se, other than NVIDIA, drive the market. But you've started to have growth, and you started to have more reasonable valuation, some other higher growth names, and value stocks have not performed particularly well. So a couple of value stocks that we like within our coverage universe are Dell Technologies and Hewlett Packard Enterprise, HPE, not HP Inc. Both stocks are trading at about 10 times earnings. HPE has a ton of cash, so it's a $22 billion market cap. By the beginning of next year, they'll have $6 billion in net cash. So you have an enterprise value of about $16 billion. They have a terrific networking business called Aruba that we think alone is worth $10 to $15 billion.
Right.
So
you guys are saying my internet sucks. I don't know why the internet's been so stupid, but the internet, the internet is kind of what it is. Justin says Mitch should buy his parents new internet with his TFC gains. I want to actually take that comment. We're coming towards the end of the stream. A couple quick things. I want to actually respond to this comment real quick, but I am going to, at 11 a.m., so in 1 hour, I'm going to be discussing with Antonio Linares his hidden Palantir competitor. So at 11 a.m., an hour from now, I'll be discussing a company that Antonio Linares, he has a Substack, 4,000 subscribers, live on this channel, who has a hidden Palantir competitor. He's done a deep dive on them, and I'm going to give him the floor to just make his presentation. So that's going to be pretty exciting, and we'll talk from there. Now, in terms of this comment, Amit should buy his parents new internet with TFC gains. I haven't talked about this too publicly, but it's it's so interesting you say this. And, going back to what we were talking about in terms of like market opportunities and becoming an intelligent investor, I want to end off the stream by saying this is a good day in the market. And the reason this is a good day in the market is because CPI and inflation came down. The reason I bought certain stocks all in May, obviously with the help of Chris, who's been mentoring me a lot, is because I've been studying the stock market for the past couple of years. I'm not the smartest, but I recognize, holy crap, there are some opportunities. And I only understand those opportunities exist because of being informed about shit like a CPI. Because if you don't know what a CPI is, you don't know when inflation comes out, you don't know when to like get into the market because there's these opportunities, because in a month or two, inflation is going to come down to 3%. And if you bought stocks when inflation was 5% because they were undervalued at 5% because the market wasn't trusting them, then at 3%, they're going to go up. You're going to have money in your portfolio. And so the reason I want to talk about this comment is because I haven't talked about it too much, but my dad had a pretty big surgery last month. And he couldn't work for the past 2 months. And so if he couldn't work, there was no income. And so me and my sister actually helped pay the mortgage for the house last month. And the only reason I was able to help pay the mortgage last month is because I've become financially literate about what's going on in the economy. My dad is scared of stocks. He doesn't know how to invest in stocks. And I don't blame him. He comes from India. He's taken a lot of risks in his life with real estate, started his own business. He is a purebred entrepreneur. The only reason I'm an entrepreneur is because I have those genes from my dad. I mean, my dad has never worked a single day in his life for anybody else. He's gotten everything he's gotten on his own. But he doesn't understand the stock market. He understands actual business, right? Not the play fun business that we talk about in stocks. But he had a pretty major surgery, right? And that major surgery, it was a heart surgery. He wasn't able to work for the past 2 months. And because he wasn't able to work, he didn't have income. He has his own business, but it's a complicated thing. But no money was coming in. And so my mom came up to us a couple of weeks ago, early in June, and she was like, "Hey, can you and your sister?" My mom also got surgery as well. She had knee replacement surgery. So she was like, "Can you and your sister cover the mortgage this month?" And it was one of those moments where I didn't even blink for a second. I was like, "Yes." And the reason I said yes is because it's like, it was finally this moment where I felt a sense of responsibility and I felt I could live up to that responsibility. Now, I've paid for a lot of things myself. The last 2 years of college, I spent $40,000 out of my pocket paying for room, board, books, all this. Like, I haven't borrowed money from my parents since 2016, really, since I was like a freshman in high school, right? So I've been financially independent for a long time outside of living in their house. Obviously, I don't pay for rent. And Indian parents will never make you pay for rent. I mean, they're not Western. They're like, if you're living in their house, you are never paying rent to your Indian parents. It's just not part of the culture. But my dad couldn't work. And so someone had to pay the fucking mortgage. And so my mom comes up to us like, "Can you and your sister go half and half on it?" And I said, "Of course." And the reason I can afford to go half and half on that is not only because I work my ass off to try to, provide valuable YouTube content and have some sort of income streams coming in, but it's because $1,600, the mortgage is $3,200. So I put up $1,600. My sister put up $1,600. $1,600 is not going to kill me. And it's not going to kill me because, things are going decently well in different opportunities where I invested my money. And I think that's one of the things that hit me over the past couple of weeks, which is like, none of my friends know about this shit. If my friends had to pay $1,600, I don't think a single one of my friends could just give $1,600 to their parents like it's no big deal, because they don't have investments. They don't have savings. Like my friends have fucking leases on Audis at 24 years old because they want to look cool, right? They're living in stupid apartments in Washington, D.C., $2,000-$3,000 a month rent because they want to look cool. They can't afford $1,600 to give to your parents. If your parents get injured, tough luck for them. Like, what are you going to do? And so, it's one of those things where Chris was talking about this last night on Finance Junkies as well. We are really privileged, the 460 people that are here, to actually stock market, to actually give a shit about financial literacy, to actually care about where our investments are going. And sometimes they don't always work out. Sometimes you go through the red. I was red a lot of money. But in that period of red, I never felt the stock market was a scam. I always blamed myself. I was like, Amit, you made the wrong decision. You invested at the wrong time. You picked not the best companies. You need to get your shit together, because millions of people have made trillions of dollars in this market. They're not more special than you. They just had more knowledge than you. They just cared more. They just researched more. For all the shit you give to people like Meet Kevin, he fucking reads like 3, 5, 6 hours a day to have a better informed understanding of the market, and then tries to be able to give that content to the world. And so what matters is information. What matters is knowledge. And again, whether your portfolio is up $10,000 today or $2,000 or $300,000, the point is you have a portfolio, you care about what's going on in the market, you have a sense of purpose in your life that's outside of just your job or your family. It is the sense of ownership, the sense of the privatization over your own security, your own wealth, your own ability to do something in your life because you have equity in some of hopefully the most amazing companies in the world because they are public and they give you a chance to take part in wealth, prosperity, and creation over the long term because the stock market goes up, because the economy goes up, because the world has to move forward. And participating in that is incredibly important. Matt says learning about stocks at 19 was the most game-changing thing I've ever done in my life. It's a big deal. It's a big, big, big deal. I just cashed out my mom a few $1,000s. And see, that's where I want to get to. You know, it was so interesting as well. By the way, the market open is gone. So is done. We're done. I'm just going to spend another 10 minutes talking. So if you want to leave, that's fine. Thank you so much for joining. But I'll spend another 10 minutes kind of harping on this. And then again, at 11 a.m., we're talking Palantir competitors with Antonio. I had a summer job in 2017 and I got paid, I don't know, like $1,000 for that job. I took 30% of that, $300 in 2017, and I bought my mom an iPad. And I bought her the iPad before I had to fly out for the job. The job was in California. I live in New Jersey. And I bought the iPad from Best Buy. It was $311. I remember it like it was yesterday. I bought it with my own money and I just put it on her desk and I put a little sticky note on it saying, "Thank you for being a great mom." And I just put it on her desk. And it was the day I was going to fly out. And she woke up in the morning and she sees it. And she's just like, you know, she's happy that I got her an iPad, not because of the iPad, but she was like, I think at that point she was starting to recognize, oh, my son is turning into someone who thinks a little bit more deeply, that if he's making money, he's recognizing how he got to the position to make money. And he's actually doing something with that money. That's not selfish. That's not just for him. And he's, you know, he bought me something. And so it's those moments where, as Chris says, I just cash out my mom a few $1,000s. I want to get to a point in life where I can legitimately, you know, just give a check for $30,000, $20,000, $15,000, $10,000, $4,000, $3,000 to my parents whenever they need, because they sacrificed everything coming to America for me. And that's the only reason I have these opportunities. And so the ability to just have the financial freedom to say, I have capital because I made the right fucking decisions. I got fucking educated. I didn't blame anyone other than myself when shit went south. And I looked for the best information to get educated about what's going on in the economy. I took advantage of these opportunities. Sometimes it takes 5 years. I haven't made money in the stock market for 5 years. The greatest market in the world of 2020, I made nothing. I made nothing because I was an idiot. I was naive. And honestly, it's the best thing that ever happened to me because that naivete forced me to learn about the stock market. Because when you're sitting at $7,000 down on a sunny day in July 2020, because the company you're in does a 10-for-1 reverse split, and you're like, what the fuck is a reverse split? And then you realize you're down $7,000. You fucking learn about the market because you're like, you know what? I need to get educated about this shit. It's those experiences that teach you more, and that stuff matters. And that one day hopefully gives you the ability to send your parents some money and to actually care. Another thing my mom has been, you know, really big on for the past couple of years is like donating 2% of your income, no matter what. 2% of your income is donated. It doesn't matter if you make $100,000, $1 million, or $10,000. 2% of that income goes away. And there's one thing I also want to say. If you have money, you need to give a little bit of it away just for the sheer nature of, I personally believe, this is my opinion, no one makes any money in this world unless you give a little bit of the good to get some of the good back. There have been so many scenarios in my life where I took a little bit of money from a check I got, a $900 check, $400 check, $1,000 check, and just gave it to someone who's homeless. I'm at McDonald's, the guys at the drive-thru, I'm getting McDonald's, the guy has a sign saying, please buy me a meal. I'm like, bro, come on, let's get you a meal. If I can pay $10, I can pay $7 for you. All right, $17 kind of sucks spending $17, but at least you're eating, and $7 is not going to kill me. It's one of those things. And ironically, people who make money tend to be a little bit more altruistic because they know they put in the hard work to make the money and they feel gratitude towards the world, giving them the opportunities to make that money, that they try to allocate it to some different opportunities for people that are less fortunate. If you have the knowledge to be up $10,000 on a day, taking 50 of those $10,000 and giving it to someone who can eat for the night, it's an important thing. It's an absolutely important thing. So I donate a percentage of my income to hedge funds. That's also one way to say it. All right, that's it for me. Amazing CPI report. Thank you all for listening. It's been really, really cool being part of this market. Now, look, the market can still go down. The market could sell off. We've got a lot of events coming throughout the year. But overall, I am on the side of the camp that it looks like we're getting into a pretty unique market. Inflation is coming down. Jerome Powell is probably going to hike one more time and then pause. And if he doesn't hike, we'll see what happens from there. Tech big 7 companies are getting a little bit, I wouldn't say frothy, but definitely mature. And so the market's rotating to some of those small caps. And as a result of that, there's a lot of opportunities. But also, my final note is I would not FOMO into anything. I would not FOMO into Open Door. I would not FOMO into Palantir. I would not FOMO into Fubo. I would look for opportunities. But if an underlying asset has run up 300-400%, even 70-80% in the last month, you just take a step back and realize, look, if you're sitting on some awesome gains, you let that stuff ride. You see how that's happening. Take some profits if you need to, but don't chase something because it could all come crashing down just randomly, and you don't want to be stuck left holding the bag at the top. Now, granted, I don't think this is the top. I think the market has room to run, but you definitely don't want to just FOMO into stocks because things are up and momentum's good. It's a green day. There can be plenty of red days, and it's important to recognize that. Okay, that's it. Johnny, the mods, thank you for the links in the chat. It's been awesome. Twitter in the description. Please make sure you follow the Twitter. Imnop says donations are tax deductible, so it's just giving money to a cause rather than giving it to the government. That's also very true. A lot of my donations honestly happen on the street in New Jersey, and like there's certain bad areas. I'm like, look, I actually grew up in a pretty, not the best area. I was born in Newark, New Jersey. And so I've seen like real poverty in the face, and I'm blessed to not be in that situation anymore, especially because of my parents. And so always got to give back as what you can. But also, if you want to professionally donate, yeah, you get tax deductions as well. All right, that's it. Last comment from Chris. Man, seeing Amit evolve as an investor has been a real joy. I hope it's been a joy for all of you because you guys saw me in 2020, 2021, talking about some nonsense, not really knowing exactly what I was talking about. I think I was right on Palantir, just wrong on the timing because I didn't even know what a market cap was when Palantir was $22. Things have changed. Things have changed fundamentally, and a lot of that is because of Chris, Vitaly, and Carlos. So forever indebted to you guys. Thank you so much. Thank you to 373 people being here. In 40 minutes, 50 minutes, we will be talking to Antonio live on the channel for a Palantir competitor and hear his thoughts. Thank you, everybody. I'll see you guys later.